Welcome to the review of the March 2020 ACCA Strategic Business Reporting exam, the SBR exam. My name is Tom Clendon and I'm from Kaplan and an expert tutor specializing in helping students pass the SBR exam. In this video, I'm going to quickly review the March 2020 exam and then delve into question 2 in a bit more detail. In this way, I can show you how to go about planning your answer and applying your knowledge to that type of question in order to maximize the number of marks you can earn when you come to take the exam. SBR is a 3-hour, 50-minute exam for 100 marks containing 2 sections, 4 questions, all of which are compulsory. Question 1 of every exam will test your knowledge of group accounts. For example, in the March 2020 exam, Part A required you to apply your knowledge as to how the functional currency of a subsidiary company is determined in a given situation. Part B required a calculation of goodwill of an overseas subsidiary, both at the acquisition date and after an impairment. A brief explanation on the impact of impairment and exchange differences was also required. Part B was for 6 marks, and in this exam, these were the only marks available for numbers relating to group accounts. Part C required an explanation on the accounting treatment of 100% equity interest that met the requirements for reporting as held for sale under IFRS 5. And Part D tested IFRS 9, financial instruments, the aspects relating to financial assets, and required a calculation and discussion of the impairment of bonds over 2 years with deteriorating credit risks between the years. This part was not well answered. So just reviewing question 1 shows the importance of being well prepared for the exam by studying the breadth of the syllabus and being able to discuss and apply the standards. Question 2 of every SBR exam will examine the ethical aspects of accounting and require you to demonstrate an understanding of the professional and moral judgments that accountants must make in practice. We're going to look at this question in much more detail later in the video. Turning our attention to section B and question 3. This question was based around a football club, putting the accounting problems in the context of a real business situation. An interesting exercise. It enabled the examining team to test the application of a diverse range of standards, from intangibles, impairment, revenue recognition, held for sale, leases. And future exam questions may well adopt a similar approach in using a particular industry or business as a context, as a backdrop to test a variety of accounting standards in a very practical way. Finally, question 4 of the March 2020 SBR exam looked at issues with a stakeholder perspective, how investors consider matters, and it focused on sustainability and environmental issues, dividing this area between the importance of sustainable information and the accounting treatment and management responses to issues around pensions and provisions. But let's begin to turn our attention now to a more detailed examination of question number 2, the ethics question. Please note that in discussing the answer to this question, I'm going to be creating an answer plan, a skeleton if you like. Your real exam answer should be crafted into proper sentences. Now, the first thing we should always be doing when we're looking at an exam question is to read the requirement. And here in part A of the question, we're looking at the accounting treatment. Whereas effectively for part B of the question, we're looking at the ethical issues. And this is typical of a question 2 in the SBR exam. This question is for overall 20 marks. So in an exam scenario, you would have something like 36 minutes or so based on 180 minutes, for actually tackling the question. So what are we being asked about in the requirement? So for part A, discuss the accounting treatment for the restructuring costs. So I'm thinking that we're going to be looking there at provisions. Part 2 is about stewardship. What do we mean by stewardship? Good stewardship for the restructuring and the recognition. Part 3 of the question, part 3 of the question is to do with related party transactions, ISA 24. And then part B is the ethical issues, which we are considering from the perspective of Mr. Shaw. So I'm going to look at the detail of the requirement again, but I'm about to read the information in the question, and I'm thinking about provisions. I'm thinking about stewardship. I'm thinking about related party, and I'm thinking about Mr. Shaw and the ethical issues. Now, as I'm going through this question, at any time, you're at liberty to pause the video so that you can have a slightly more detailed and considered reading of the question. In an ideal world, I'm imagining that you've done this question before, and I'm sort of helping you debrief and deconstruct and understand your answer. So we've got some background information. And the key thing, if you remember, is we were talking about Mr. Shaw. Mr. Shaw. Group results have been disappointing, and they're trying to discuss various strategies to improve their performance. And Mr. Shaw is the head accountant and married to Mrs. Shaw, and there's a nephew there, Mike Starr. Mr. Shaw is an ACCA member. Well, why are you told that? Well, presumably that means that we have high expectations of technical competence and ethical principles of Mr. Shaw. He's not a member of the board of directors, so I'm thinking about related parties when I read that information. Now, there's a potential restructure. Potential, that's a key word. Is it probable? Is it possible? We'll talk about that in a minute. It's been discussed. There's been an analysis of the costs. Now, these costs include relocation costs for staff. And I'm a little bit worried about that, because when we make a provision for reorganizational costs, shouldn't include continuing activities, and relocation is continuing activities. One employee that might be made redundant is the nephew of Mr. Shaw, so it's close to home. Now, Mrs. Dawes is insistent that Mr. Shaw should include the restructuring provision for all of the expenditure. And there's an argument going on, and it's thought to be an argument of being prudent, but there has been no announcement. None of the staff have been notified, and there's been no announcement. So that's the background. Now, I know there's a bit more information, but I think I've already got the ability to answer the first part of the question. So let me think about a little bit of an answer plan, because basically if Bagshot is going to make a provision for the costs, then effectively all three conditions must be met. Now, one of the conditions is there has to be a present legal or constructive obligation. Now, you're never legally obliged to reorganize, so there has to be a past event that creates the valid expectation. And what we're looking for is an announcement. And I don't think we have an announcement that exists at the moment. So there's been no announcement, and therefore, effectively, there's no constructive obligation. Now, the other condition that needs to be met is there has to be a probable outflow of economic benefit. And the phrase in the question was about the potential. Yeah, there's a potential reorganization. And I'm not convinced that potential meets the threshold of probability. Now, there's a reliable measure factor, but I don't really see that is relevant as a big point. So our conclusion is that at the moment, we're not going to be able to make a provision. Our conclusion is at the moment, no provision can be made. If we were going to make a provision, then there would be no provision allowed for the moving costs, for the relocation costs, because they are a continuing activity. Now, it's 6 marks and I've only made 5 points. So maybe there's a possibility of saying, look, if the announcement is made before the year end, you can make a provision, but if it's announced after the year end, you can't. So there would need to be an announcement before the year end if we wanted to make a provision. Something like that. 6 little short paragraphs to make the points. So what is meant by good stewardship? Yeah, that is a requirement in its own right. And then secondly, whether the restructure and the recognition are examples of good stewardship. So let's think about what we understand by stewardship. And stewardship is, I suppose, the accountability of someone else looking after your resources. So for me, good stewardship is about accountability. Yeah, looking after someone else's resources in a proper way. And the example that we've got here is the fact that the directors are managing and looking after the resources of the shareholders. So they have custody, they have control, and good stewardship means they manage them in an appropriate way. So is it good stewardship to do with restructure? Well, at the moment, the business is making losses. And what we're trying to do, what the directors are trying to do, is to turn the business around. So I would argue that this is, yes, it is good stewardship because they're trying to improve the fortunes of the business. Now, in terms of recognizing the provision, I'm not so sure. In terms of recognizing the provision, mathematically they've got it wrong in the sense that you can't include those relocation costs, and there hasn't been a public announcement and valid expectation. So this is technically incorrect, and good stewardship is about telling the truth. So it would not be an example of good stewardship if we were to recognize the provision. What have I done here? I've made 4 points. Yeah, because there are 4 marks available. So we've got 3 marks to earn. And I think the first mark is going to be around, defining and explaining what a related party is. And one related party is the idea that you're a member of the key management. And that would include, the idea of there being a close family member. And there's always that suggestion about control or influence going on. Now, when we come to apply this, there's no dispute that Mr. and Mrs. man and wife are close family members, but there was a clear statement in the question that Mr. Shaw is not a director. Okay, he's an accountant, he's not a director, and therefore perhaps he's not a member of the key management. And on that basis, I would arrive at a conclusion that it is not a related party transaction that needs to be disclosed. Now, you could come to a different conclusion and justify it and say that as an accountant, the chief accountant, he is a member of the management team and involved in the board discussions. But that's my answer here. Have a look at the examiner's answer as well, because that obviously goes into a little bit more detail. And this was an area of weakness in this particular exam. Identify and discuss the ethical issues arising from the scenario, and the actions that Mr. Shaw should take. And it's appropriate that we do the ethics at the end because we take the holistic view. Now, there's lots of ethical principles, but you don't want to start listing them. For me, I think the idea is that Mr. Shaw is on the inside. I think the ethical issue here revolves around confidentiality, okay? That he knows about the reorganization. He knows about the redundancy. So he has effectively inside information that might affect the share price, and his wife is an investor. He also has a relative, a nephew, whose job is at risk potentially if the reorganization goes ahead. Now, what action would you therefore be suggesting that you take when you recognize that you've got this information? Well, I think the answer is clear. I think the answer is you take no action at all, that Mr. Shaw mustn't disclose to his wife that the company's going through this turmoil, and mustn't disclose to his nephew that the nephew might lose the job. So think about the ethical issue and then think about the action. Pair the two together. Have a little subheading. Have a little subheading. Yeah, that's the way to approach it. But it's about ethical issues. It's not just confidentiality. I think there's another ethical issue which revolves around the potential errors, that revolve around the errors that have been made in respect of the relocation costs and the insistence, that a provision be made. And I think there's a couple of issues here. First of all, competence. Now, Mr. Shaw and the other lady, they're both ACCA members, so we expect them to be competent. That's a key ethical pillar. Now, there's a small suggestion perhaps that integrity might be at play here if they know what they're doing is wrong. And as ethical accountants, we've got to be competent, we've got to do the right thing. So what action is Mr. Shaw going to take? He's going to have to confront. He's going to have to ensure the correct treatment is going to take place. Because if that correct treatment doesn't take place, he's compromised and he would need to take legal advice and think about resigning and so on and so forth. So, there's several layers to this. We've got to mention that they're ACCA members, that we have high expectation. You're not just going to get marks if you regurgitate those core principles. You've got to apply it. Okay, please refer to the published answers as well as to the examiner's reports, both of which can be found on the ACCA website. And here are some reflections and feedback from the examining team. Now, as you've seen in this video, by planning your answer, you will be able to maximize your marks through the use of a structured layout, including headings. Please note that the mere knowledge of accounting standards and ethics is insufficient to pass this exam. To pass, you will need to apply your knowledge. But isn't it heartening to note that you may be awarded marks for discussion of issues which don't appear in the suggested solution, but which are relevant to the scenario, and that extra marks can be gained if you discuss a point particularly well? This is, after all, a final level professional exam and one that is expert marked. Thank you for watching and good luck in your exam preparation.